The Port of Los Angeles, for example, saw its cargo volume last week drop around 35% compared to the
Beijing. President Xi meeting with senior leaders from about 30 countries across Latin America and the Caribbean.
A 35% crash in America's busiest port. Retail inventories thinning fast across the country. These were the ripple effects of Trump's 145% tariff shock and China's countermeasures. Now, under economic pressure, the U.S. has agreed to a 90-day rollback. Tariffs are down. Trade is resuming. But behind the handshake, one question looms. Is Beijing quietly taking the lead? And is America falling behind? In this video, we unpack what triggered the deal, how global players are reacting, and what it could mean for the future of U.S. power. President Trump's decision to lower tariffs from 145% to 30% wasn't driven by strength. It was driven by economic pressure. The Port of Los Angeles reported a 35% drop in cargo volume compared to a year earlier. Seattle and Tacoma anticipated an 8 to 15% decline. For dock workers, this translated into fewer hours and job insecurity. Port officials described the situation as chaotic, with difficulty planning labor and operations. Retailers, meanwhile, faced thinning inventories, with many estimating only 5 to 7 weeks of stock remaining. This rollback wasn't a strategic maneuver. It was a short-term response to mounting logistical and political costs.
The two signed several agreements, essentially allowing China to invest more there in order to buy more products from Brazil.
While U.S. companies rushed to capitalize on the tariff reprieve, China moved in a different direction. President Xi hosted leaders from 30 Latin American and Caribbean countries in Beijing, signing agreements in infrastructure, mining, and AI cooperation. Chinese private firms pledged billions in new investments. Beijing also secured a 157 billion yuan currency swap with Brazil, reducing reliance on the US dollar. While the US stockpiled goods, China was building new trade pathways and financial instruments. Rather than reacting, China used the moment to expand its global position, especially in regions the US once considered within its sphere of influence. Trump's 145% tariff led to a rapid collapse in trans-Pacific trade flows. Maersk North America reported a 30 to 40% drop in shipments from China. Many importers halted orders entirely, uncertain how to price or move goods. Some businesses rerouted products through Canada to avoid high tariffs, trucking them overland once the rollback was announced. Economists warned of upcoming consumer price increases, especially for seasonal goods. Logistics costs surged, and shipping lanes were destabilized. Meanwhile, Brazil expanded agricultural exports to China, and electronics producers in Southeast Asia stepped in to replace US-based suppliers. Rather than a temporary disruption, this marked a longer-term diversification away from American trade routes.
So it's common sense that Trump will not get where he wants to. So he talked about a reset the relationship, but I believe he actually...
Yes, a deal was signed. But Chinese analysts and officials quickly framed it as a concession, not a compromise. Zhou Bo, a retired PLA colonel, called it a first-round win for China, saying the rollback came from US weakness, not mutual agreement. Chinese state media doubled down on this interpretation, stating attempts to isolate China were futile. China, now the largest trading partner for over 140 countries, views itself as indispensable to the global economy. As one commentator put it, trying to isolate China is like trying to isolate the world. The US, meanwhile, shifted from maximum pressure to reluctant de-escalation, without securing major concessions in return. Beyond the headlines, this episode reflects a deeper credibility gap for the US retailers, say planning has become near impossible. Port officials struggle to manage staffing under volatile volumes. According to interviews from the Port of LA, only 8 container ships docked recently, down from 10 to 12. Hundreds of dock workers waited for jobs that never came. Even as tariffs eased, businesses warned the damage had been done. Short-term relief doesn't undo long-term uncertainty. While China expands trade networks and reduces dependency on the US, America finds itself reactive, not proactive. The tariff war didn't break China. It exposed fractures at home. So after all the tariffs, disruptions, and political theater, where does this leave us? The US pressed pause, but China pushed forward. While American businesses scramble for clarity, Beijing is locking in trade routes, alliances, and influence. This wasn't just a 90-day truce. It may be a glimpse into a new economic order, one where the US no longer sets the terms. What do you think? Is America still leading or quietly stepping back? Let us know in the comments, and don't forget to like and subscribe for more breakdowns like this. We'll be watching, and we'll keep breaking it down for you.